Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. Good afternoon, Dave. Good evening, Anissa. Coco, I'm not gonna respond. Hello. Yeah, and everything's not priced in. All right, earnings contractions aren't priced in. It looked like something broke in the 10-year treasuries, which, we had some liquidation, but this wasn't that bad a day even. This was not even a bad day. This was nowhere near capitulation. I'll tell you why. I'm about ready done. My head should be bloodied. I should be wearing bandages on my head because I've been beating my head against a friggin' wall all day. Uh, Literally, I'm tired. We're going to do a review, and I'm going to probably go on a mini rant, and then we'll do some prep on Sunday. And I'm not going to respond to stupid comments. All right. So if I see stupid comments, from my opinion, they may not be stupid from your opinion, but if they're stupid from my opinion, I'm not covering them. Hello, Sashi. Good afternoon, Sterling. Good afternoon from the tax haven of the UK. Welcome, AP's World. I really love having such a diverse audience here. So, just a quick recap. Composite, if you were paying attention, the composite PMI numbers coming in. Still, the services and composites still in contraction, but much better than the prior month. People didn't like that because, wait, what do you mean? The numbers aren't as bad? Well, geez, you mean the Fed can keep hiking? It's still not baked in. It's still not baked in. Rig count actually going up a little. That was better for just a crude situation. Then we had Powell speaking. Pretty sea of red. It's not as bad as it looks, though. Yeah, you had some things down, like Amazon down 300 basis points. Tesla finally took it in the shorts a bit. Oil got hit hard. Oil got hit. I mean, there wasn't a lot of green. You had some Home Depot green, some healthcare green. Not a lot of stuff. I mean, if you were thinking of painting your house, Sherwin-Williams up. Other than that, it wasn't that bad. This was not capitulation. And I'll explain why, and I'll explain why my head should be bandaged. Still 71% for the 75 basis points, not till November 2nd, so we have a long way. Remember, negative gamma, you can get the amplified moves up and down. Fear and greed, finally starting to drop into extreme fear. So I am watching for at least a short-term bottom. A short-term bottom. Might it have occurred today? Yes, it might have. Is this a long-term capitulation bottom or even a medium-term capitulation bottom? No. No. Oh. First off, I mean, we're only S&P is only down 160 basis points. NASDAQ only down 154. It was worse before it did snap back, but I'll tell you, hey, John. Yes, this was the test of the June lows. This was clearly the test of the June lows. What's your opinion on what the EU bank did? Everyone thought the EU will do the same as the Bank of Japan. I don't think everyone thought that. I was not under that impression. So, real quick, I just want to do a recap of this price action. Why? All right, this is not a capitulation because not a big enough down move. And I'll tell you, it's handy having an audience here, and it's handy having people on Discord, and it's handy having people reach out to me because the one question I got asked all day is this the low? Should I be buying now? Is this the low? Is this the low? Is this the low? All day long. Does that sound like people throwing in the towel? Does that sound like people throwing up their arms and walking away from the market? No. Everybody was looking. Everybody's going, oh, I want to buy this. I want to buy this low. Is this low? I want to buy it. I want to friggin' buy it. That is not a capitulation move. We did not have blood in the streets yet. It actually wasn't that bad a day. We finally retested the low area as the probabilities stated. Again, not a guarantee, but we didn't even break to new lows. I mean, our S&P harmonic level did very nicely. I think it missed by what? What was it? We had 36, 59, 75. It was, again, we're watching for an area around there. It came in at 36, 60, 25. Again, we're not trying to hit something. It gives us an area to watch. You can see we dipped into the other one and bounced, and then this was just, again, you had a lot of short-term covering, especially going into the close. This was people, again, look, the June lows held. We didn't even break the June lows. The only one that broke was the Dow. Okay? Russell didn't. NASDAQ didn't. S&P didn't. There were dip buyers, especially this afternoon. Okay? We couldn't even break the lows yet. There were too many people all day. Wait, we got the retest of the June lows. Time to buy. Time to buy. They didn't break. Time to buy. It was every excuse to buy in the book. Oh, look, valuations are slightly better. Let's buy. Let's buy. That does not, long-term low, this does not make. It doesn't even hit technical rules for a capitulation move. Yes, it was a pretty big, there's your red week. And by the way, all those people last week is saying, oh, what happened to bad September? Or the week before, bad September, ha ha ha. We're still in friggin' September. It's a pretty bad September so far. Pretty bad September. I mean, here you go. You got the month down. Month is looking pretty ugly, closing in on that 50. Now, also, would everybody stop trying to think of something and trying to buy a low and sell a high? That's another reason I beat my head against the wall. It's literally everybody's trying to buy the low tick. I got to buy the low. Why do you have to buy the low? Because you're not going to buy the low and you're not going to sell the high unless it's by sheer luck. And why are you even trying to pick the day of the low and pick the day of the high? I am so tired of hearing about this. You're not focused on probabilities and making money. You're focused on trying to buy the low or sell the high, which is a fool's game. Let's say we get a buy signal on Monday above today's high. Did you buy the low? No. Did you even buy the day of the low? No. If it then ran up to even 50% of this move, even let's say it retraced the whole move from mid-August, it retraced, does it really matter if you bought at 3,700 or 3,770? No. It's not that big a difference because you're not going to sell the exact high either. So stop. Watch for the setups and stop worrying about trying to buy every low and selling every high. You're not focused on the markets. I think you'll get a nice bounce to add the short position. NASDAQ. Let's peek in on the NASDAQ. Again, did not hit the lows. Retested the weekly 200 simple. This was an area before, which is actually higher. But again, we didn't break to June. I would have loved to see this break down. At least then we could have got possibly more of a capitulation. This was people that say, hey, I'm stepping in front of June lows. Yes, it hit the 200. And good review on watching that 200 simple. The Dow was the only thing. Broke. Closing above. I mean, we still got 15 minutes, but closing above. That's even not that's especially not a key signal yet. Not even the close below there. Now, am I watching for a short-term bottom? Yes. Is it a short-term bottom? Can we determine it by this afternoon buying pressure? No. A, we didn't meet criteria for a capitulation. B, we had a Friday afternoon where people were looking to buy, and cover short positions and cover already a sell-off on a Fed week and not carry it through the weekend. And then you started to get the buying pressure, remember? You start watching between 2 and 2:30. Well, look at this. Right at friggin' 2 o'clock. And then people start seeing this bar. All right, time to start covering. Time to start covering. Buying into the close. No idea what you're referring to, Coco. VIX really showed the end of day covering started at 3 Eastern, yes. And it was just, which is, I was talking Central Time, 2 Central. And between 2 and 3, especially on a Friday afternoon, yeah, we're likely to get a bounce. We still also have the cycles at the bottom. We are likely to get a bounce. What do you think? And I'm going to be watching for the next rally attempt for, again, a rollover play. This is actually, I like it better because we didn't break to new lows, because people will say the lows held. Let's all rush in and buy it. So we'll come up with our key levels on Sunday, but we have daily and weekly cycles at a low. And we still have, I'd have to say, based off of all the conversations I had today, it was 80 to 85% bullish. Gotta buy. Gotta buy. So we're not done. We're not done. Hey Paul, welcome. We broke a 90-day low on the Nasdaq. We didn't just close there. Oh, on the NDX. You know, on the NDX, you broke down, but you didn't close below the June lows. You didn't even test the June lows on the Nasdaq 100 index. I use the futures more because of this. The S&P, the SPX didn't go to new low, didn't go break below the June lows. The only thing was the Dow. The only thing was the Dow. So the lows have held. By the way, before anybody asks me, this is not a double bottom. It's the targets would be beyond here. So this is 2 bottoms. Okay? Not a double bottom in the S&P. The Nasdaq is a potential double bottom. Potential. Just because you have 2 bottoms in the same area, again, never has to trigger. The Dow is not. The Russell, I'm just going off the left side targets because we don't know if the right side lows in, is. So the only 2 potential doubles are in the Nasdaq and the Russell, and they are a mile away from even confirming. But just wanted to sit. The S&P is not, and nor is the Dow. And I've tested out stuff with that. 90 days, it doesn't really matter that much if it's a 90-day. Doesn't matter. So, my whole thing is from today, stop trying to call a bottom. B, there are too many people, not just people who follow this channel, but people who you would never talk to in a million years. They're looking for bottoms. The notes potential, again, we have a potential short-term bottoming signal here. Nice little doji. So we'll take a look. Dollar index, there was the flight to safety. The flight to safety. Now this was a massive move for the dollar. Massive move for the dollar. So this is also why if we get some pullback in this, we will probably see pullback in the dollar. We'll see a rally in the stock indices. VIX, this was not fear, by the way. Another reason this wasn't a capitulation move. Yes, the VIX was up, but this is not fear. This was not a capitulation move. We couldn't even get a decent spike even into the around 35. Not capitulation. Sound like a broken record. Bitcoin actually holding up quite well. Going to really be watching for a bounce now in that. Euro breaking down, watching for a bottom. We're closing into this 96.52 area, so I will be watching for a bottom there. And these would be short term. Euro might be putting in a more if we get some. This was closer to a blow off top in the dollar, or at least a more substantial top in the dollar. So we'll be watching potentially for a more substantial bottom in the euro. Yen a little skittish, and that normally is a flight to safety, but still a little skittish. Watching for this to burn off the central or the Japanese bank intervention from yesterday still. Let's just cover, since Rich brought it up, I'll cover that on, let's just see. This is why people finally capitulate after they've seen so many bottoms and bounces that they finally just give up. And we don't have the people giving up yet. There's people not giving up. That's generally when you get more capitulation, or people just throwing the thowel saying, they've bought, and then they're just like, or they get the margin call. We're not there yet. We didn't even break below June lows. People have not thrown in the towel. Too many people, including professionals. I'm not just talking amateurs. I'm talking professionals we're looking to buy repeatedly today. Rich brought up next week, we'll just peek in on that. We have PCE, and PCE, one of the favorite Fed indicators. And you have, let me call this up. Oh, come on. Here we go. For next day, and I was going to cover this Sunday, but you brought this up. So, Monday, not much besides Fed speak. How Bob hates me saying it, Fed speakies. Tuesday, durable goods. More Fed speakies. Consumer confidence next week also. And then Wednesday, you don't have much besides Fed speakies. Thursday is the final Q2 numbers. They should still print negative, unless there's some really weird math that goes on. So you got this is not going to surprise. The only way this would be a surprise if it prints positive, which I don't think the market would like to see, because that's like, okay, then our 2 quarters of back-to-back, which the people are still leaning on today, that should be a reason the Fed should pause. If this printed positive, that would be a surprise. Don't think it's going to. Now, these are backwards-looking numbers, and this is the final revision. Okay, so that's not going to be a biggie. Once you start seeing the Q3 first estimate numbers, then that's the bigger one. Now, on Friday, we have core PCE. That's big. Friday's big. And you got consumer sentiment final. I'm still thinking we're working off the summer bounce, though. And then I think next month's going to be brutal for consumer sentiment. But Friday's going to be your big day. Thursday, Friday, that's the day you got to watch out for next week. So could we easily get some short-term bounce beginning at next week, especially at all these cycles at the bottom? Yes. Is that a long-term just back up the truck and buy? Not from anything I follow. Just looking at what Federal Reserve is projecting larger increases on. Yeah, well, we still got the 75 basis point. Even Goldman, 75 in November, 50 in December, and 25 in February. And I'm not going to touch on Elon and Twitter today. That's just too, yeah, mortgage rate. Mortgage rates are back. I've seen some mortgage rates above 6.5. There's a lot that's not being discount that's not done yet. Just notice you've had to break out the jacket. It's cold and gray here today, but I still got the jacket on, but I still have. It was the black for margin call. Margin call Friday. I actually think I titled it this morning. I know there were some margin calls, but not bad. This was something that was about to break because the liquidity stinks also. Yeah, it's getting cold here. All right, unless there's something else, that's where I'm leaving it. So let's crude. By the way, crude came down that nicely tagging that 79 area. So this little potential double off the table. Still now I'll be watching going into next week for crude to be forming a short-term bottoming pattern also. Especially with that hurricane. Is it officially categorized a hurricane yet, or is it still a tropical depression? The one that's closing in on the Caymans. So that's where we sit. Don't need to harp on anything else. I hope everyone has a great weekend. We'll come back Sunday afternoon with our analysis to go into Sunday evening and Monday morning and help us set everything up and prep for those days. So, do your market reviews. I'll also get out a sector overview. By the way, everything's still in the mid to long term sell mode. Even with a bounce potential next week, we're still in mid to long term sell. So just rest well. Have a wonderful Friday evening. Have a wonderful weekend. And I will see as many people who can attend live on Sunday afternoon. Until then, talk to everyone later. Bye.